My wife and I are both retired. We're about 60, and we do have some savings. We inherited some savings. We also both have Timothy plans and small annuity. We receive a teacher's pension, and really we're wondering about life insurance. Should we continue paying for life insurance? We do not currently have any debt, and so we're kind of wondering about the best thing to do with that.
If you haven't paid extra into it, what I would suggest doing is contacting the insurance company and asking them to send you an in-force illustration. Now, what that will show is if you continue to pay the current rate, at what point will your policy lapse? So if that's sooner rather than later, I would consider stopping paying that. It doesn't sound to me like you have a need for life insurance since you're not in debt. It sounds like you've got does the pension income continue for the surviving spouse once one of the spouses goes home to be with the Lord?
The way we have it set up, if I pass away, my wife would not get any. If she passes away, I would continue to get half of hers.
Okay. So if you go first, are there enough assets there to provide income to replace that lost income for your wife?
Yes, I believe so. Like I say, we have a Timothy plan. We have a small annuity. So probably. How's that?
So my suggestion would be to figure out, should you go first, is there enough assets there to replace that income that would be lost? And if the answer is yes, then you probably don't need to continue the life insurance. If the answer is no, or you're not sure, and that in-force illustration shows that the policy is healthy and will last quite a while, then you may want to consider keeping that. Affordability is the other question. So when you get that in-force illustration that you may not be able to afford to continue paying the premium in a few years, then, you might want to consider just stopping now and putting that extra money back into savings or into your investment portfolio.